More on Amazon's after-hours move. Let's get a check on the charts with Chris Verrone of Strategas Research Partners. Hey, Chris.
Hey, Melissa, how are you? Certainly a good response thus far from Amazon, up about 3% after hours. But I think we do need to take into account the stock is up a lot this year. I would look to today's low, about 1,800, as a good tactical stop for any longs, and maybe 1750 as a good longer-term stop. That's the uptrend that's been in place over the last year. I think when we put this in context of what the Qs are telling us, down 1% today, the Qs, but when you equally weight them, they were actually up. So the average tech stock actually fared pretty well today, despite Facebook. One of our favorites does not get enough attention here. This is Apple making new relative highs, new absolute highs. The breakout was 1,200. We're targeting 1,400 here on Alphabet. And then lastly, this is Apple. Does not get enough attention. About to make new relative highs right there in absolute terms. You get it above 195, 196. You're looking at 210, 215. This is still a leadership stock, and we want to own it here.
All right, Chris, why don't you come on over? Michelle will bring the chair in. I like how you guys don't even question.
Well, now you just,
you've established your dominance over. This is not a democracy. We're just living in Melissa's world.
So the price action today proves that technology is still strong.
Well, the price action
stronger
today was
than you thought.
Yeah. I mean, they hit Facebook hard, as we know. Equal weight, the Qs are up. Yeah. You look at the equal weight S&P, up about 70 bips. The average stock is faring well. I thought one of the most important stories today that people are not talking about, 50% of the industrial sector made a one-month high. It's a sector that's been out of bounds for 6 months. It's starting to show up here again.
So Dan was talking about what Mike Wilson of Morgan Stanley was saying about this rolling bear market. Should we be concerned about this rolling bear market?
I think there are certainly pockets of leadership in a bifurcated tape, but let's keep in perspective. The financials off the playing field for 4 or 5 months starting to show back up here. The response from the banks the last 2 or 3 weeks has been absolutely fantastic here. You look at healthcare. Lilly breaking out of a 3-year base. You can't ignore that. So I think, if anything, the market may be getting a little bit broader here. But, Dan, a good point. There are some groups that are absent. Autos being maybe the best example.
How do you think bank stocks are going to act if home builders continue to make new lows, if autos continue to make new lows, if we don't have stocks like Boeing and some of the stuff that break out? I mean, to me, I think it's just, the writing is on the wall for some of the stuff. And then if you start to lose some of these mega horsemen that have been literally driving the train, not on an equal weight basis, but on an absolute basis, I mean, to me, it doesn't really look that rosy.
It's a good point. I think when you look at the banks, remember, put volume has been huge on these stocks the last month. So expectations are low. You also saw big outflows over the preceding 3 months. So the bar is low, I think, for these to actually surprise on the upside. Industrials gave us that message last week. You saw big outflows from the XLI over the last 2 months. That is a good contrarian signal that you want to be buying them here.
So I know you look at the charts, but I can't help but look at something like the rhetoric on trade, which to be, last 24, 36 hours has been a lot better. That, to me, seems more important. How do you factor that in, or do you not factor that in at all?
I factored it in from the perspective of trading the news is an easy way to lose money in this business. And if you look at how resilient this tape has been, in spite of what have been nasty headlines for 3 or 4 months, I think you have to view that as a win, not only for the market, but for rates. The fact that rates aren't back at 250, I think, is really telling. They're right back at 298. You got to suspect they're going higher here.
Just quickly, Facebook chart.
Listen, I think that 175, maybe down to 165 is the line in the sand. If it can hold it, I get interested. But when a stock breaks like that, it has to repair. Remember, it's still up from where it was in February. Let's keep that in context as well.
All right, Chris, thank you.
Thank you.
Chris Verrone, Strategas Research Partners.
Wait, I got to give Karen some props. Remember Google? We got in a fight maybe about a month ago. Yeah, you remember that? Okay. Yeah, but just to be fair, it did drop 7%. It did make that double top, and then it's come back and it broke out. And I agree with Chris. It's probably one of the best looking charts in the entire market the world over, but you're right on the fundamentals, and the technical setup was great. He talked about this consolidation. You got this nice long base, and who knows?
Well, thank you.
Right.
Thank you.
She's right.